Hello, everyone. This is Brent Foster, and this is your weekly market insights, the Northbound Wealth Podcast. Today is October 28th, and we just have a few more days here until the presidential election. Get out and vote and make America great again. That's all I've got to say about that. But let's dive into the markets. So stocks were mixed last week as fresh economic data points and election-related uncertainty slowed the market momentum. The S&P 500 fell 0.96%, while the NASDAQ index rose 0.16%. The Dow Jones Industrial Average dropped 2.68%. The MSCI EAFE index, which tracks the developed overseas stock markets, slid 2.30%. So the NASDAQ leads. Stocks were mixed for the first half of the week as investors geared up for a steady stream of Q3 or third quarter reports. The 10-year Treasury yield continued to trend higher, which caught the attention of some traders. Markets fell Wednesday morning with news that the existing home sales fell to a 14-year low in October, still slowed by higher interest rates. Sales are on track for their worst year since 1995. Also, pre-election jitters remained to undertow with traders. News that durable goods orders rose in September buoyed sentiment a bit. At Friday's close, the NASDAQ, fueled by technology names, marked its seventh consecutive week of gains, but the S&P 500 broke its six-week winning streak. And I've got some Y charts on the blog, so check it out at northboundwealth.com. Weekly market insights. The Dow year-to-date is up 14.15%. MSCI EAFE is up 8.57%. NASDAQ is up 23.37%, and the S&P 500 is up 23.17%. So a solid year of gains thus far. See if they take hold, and I anticipate they probably will through the end of the year, as we'll likely have kind of a bit of a melt-up and a Santa Claus rally. 10-year Treasury note closed at 4.25%. We're kind of watching that. Hopefully the top end of the 10-year note is at 4.5 and down. If it starts to get up above that would be a little bit concerning, probably affect the equity markets, and we might get a pullback. But for now, it looks like we're holding in there. Source is Y charts as of October 26th, and I just became a client of Y charts. There's going to be a lot more charting and market analysis produced by them for my firm, so it'll be exciting to be able to tap into a lot of those insights. I'm really impressed by what they're providing to registered investment advisory firms like myself. Election is in focus. With the election cycle in full swing, some traders appear to be preparing for an uptick in volatility in the coming weeks. And that's indicated by the VIX if you pay attention to that. In late August, nearly 90% of the stocks traded above their 20-day moving average. However, that momentum has slowed. On Tuesday, S&P reported that the number of stocks above their 20-day moving average fell to nearly 50%. Traders may be moving to more of a risk-off position ahead of the November 5th election results, which does make sense. We've had a number of prints of all-time highs across the major indices coming into this past week and this week. And actually, the start of this week is looking actually pretty good. Okay, key economic data that we're tracking for this week. Tuesday, international trade in goods, consumer confidence, Case-Shiller Home Price Index. We'll watch the housing market there. Wednesday, gross domestic product, Treasury refunding announcement, pending home sales, ADP employment report. Thursday, personal income and outlays. Friday, employment situation and ISM manufacturing index. So we'll see how the manufacturing industrial complex is doing. And then we got notable companies reporting earnings. Let's see, later today, we got Waste Management. Tuesday, we've got, Google, Visa, Advanced Micro Devices, McDonald's, and Pfizer. Wednesday, Microsoft, Meta, which is Facebook, Eli Lilly and Company, AbbVie, Caterpillar, Amgen, Booking Holdings, ADP, and Starbucks. Thursday, Apple, Amazon, MasterCard, Merck, and Uber Technologies. Friday, Berkshire Hathaway, Exxon, and Chevron. So very busy week with the earnings of Q3. It'll be really interesting to watch and trade. All right. So tax tip of the week: is your office in a historic building? You may be eligible for a tax credit. To protect heritage sites and other history, the IRS implemented its rehabilitation tax credit which offers an incentive to renovate and restore old historic buildings. Here are some of the highlights to help you determine whether your building is eligible. The credit may pay 20% of the qualifying costs of rehabilitating a historic building. This 20% needs to be spread out over 5 years. The credit doesn't apply to the purchase of the building. Taxpayers use the Form 3468 investment credit to claim the rehabilitation tax credit. Although this credit might not significantly improve many situations, it's still a step towards preserving our country's history. This information is not a substitute for individualized tax advice. Please discuss your specific tax issues with a qualified tax professional. And this tip was adapted from irs.gov. All right, stay tuned for the next segment. So Tuesday, October 29th, stock analysis presented by Yield Street. I did like some of the news headlines. Stock and market news, Apple updates. So Apple released an iOS 18 update adding AI to iPhone 16 models, enhancing Siri's capabilities and offering new text and photo editing tools. The company also unveiled an updated iMac with a M4 chip starting at $1,299. Available for order before its November 8th release, Apple is also expected to post a 5.7% fourth quarter revenue increase driven by strong iPhone 16 demand in China, sources say from the AP, CNBC, and Reuters. In other news, JP Morgan Chase sues customers, and they're suing them and they're accusing them of exploiting a, quote, money glitch, end quote, that allowed users to withdraw funds before checks cleared, resulting in hundreds of thousands of dollars in losses. That was a sourced article from the BBC. Waymo funding round. So Waymo, Alphabet's Google autonomous vehicle unit, raised $5.6 billion in its largest funding round with 100,000 weekly robot taxi rides across San Francisco, Phoenix, and LA. Waymo plans further expansion, increase fleet size, sources at the New York Times say. Office loan stress. So U.S. regional banks, including KeyCorp, which is like KeyBank, Fifth Third Bank, and other banks like them, are facing increased non-performing loans in commercial real estate portfolios due to remote work's impact on office demand. While rate cuts may ease pressures in other CRE segments, or that's commercial real estate segments, analysts expect continued challenges for office loans as a $950 billion maturity wall approaches, sources from Reuters say. Election prediction market. So Robinhood has launched a U.S. election betting feature leveraging its 23 million user base to tap into the growing event contracts market. This follows recent legal challenges that temporarily allow election betting in the United States, sources from Axios state. Target lowers the meal price for Thanksgiving. So Target is cutting its Thanksgiving meal price to $20 for 4 people, which is down $5 from last year as it competes with other budget-conscious holiday offerings amid easing inflation, sources at CBS state. So here's some earnings highlights. So Ford slightly exceeded expectations with adjusted EPS of 49 cents on 43.07 billion in automotive revenue, but it guided EBIT or EBIT to, which is earnings before interest and taxes, to the low end of its $10 to $12 billion range amid supply issues and rising warranty costs, sources at CNBC say. McDonald's reported a 3% revenue increase in the third quarter, driven by value-focused promotions and menu additions, despite a 3% drop in net income and E. coli concerns impacting U.S. traffic. Same-store U.S. sales rose 0.3%, but global sales fell 1.5%, source at Wall Street Journal state. So BP, or British Petroleum, posted Q3 earnings of $2.3 billion, its weakest in nearly 4 years due to lower crude prices and refining margins. Though it beat estimates of $2.1 billion, BP maintained its dividend and announced a $1.75 billion buyback. Its shares fell 2.5% amid concerns over future profitability, sources at CNBC state. Pfizer beat Q3 earnings estimates with $2.3 billion in Paxlovid sales, surpassing forecasts of $456 million, raising its 2024 revenue target for COVID products to $10.5 billion. Shares rose 1.5% pre-market as adjusted EPS hit $1.06, exceeding the 62-cent forecast, Reuters states. PayPal reported Q3 earnings of $1.20 per share, surpassing the estimate, but slightly missed revenue expectations with $7.85 billion. Total payment volume rose 9% to $422.6 billion, though PayPal's Q4 guidance of low single-digit growth disappointed analysts. Novartis raised its 2024 profit guidance for a third time, now projecting high teens growth due to strong performance from key drugs. Despite this, shares fell 3.5% on investor concerns over future growth amid looming generic competition, sources at CNBC and the Wall Street Journal state. So, world in news and politics. North Korea troops in Russia. The Pentagon confirmed that North Korea has sent approximately 10,000 troops to train in Russia, with some units already close to the Ukrainian border. This deployment has heightened international tensions, sources say at the AP and Reuters. Gaza updates: an Israeli airstrike in northern Gaza has reportedly killed at least 60 people, according to Gaza's health ministry. Israel's parliament has also passed a law cutting ties with the UN Agency for Palestinian Refugees. Sources from the Wall Street Journal and BBC state. Washington Post fallout. So Jeff Bezos defended the Post decision not to endorse a presidential candidate, stating in an op-ed that endorsements can create a perception of bias. However, the fallout from the decision continues. 3 editorial board members resigned, and over 200,000 subscribers, about 8% of their readers, have canceled. Sources from Wall Street Journal and CNN have stated. Grants for ports. President Biden will allow nearly $3 billion in grants aimed at reducing emissions at U.S. ports, with a focus on electrifying infrastructure, cutting pollution, and creating approximately 40,000 union jobs. The funding will support 55 ports nationwide, says the AP. China's richest person, Zhang Yiming, co-founder of ByteDance, is now China's richest person with a net worth of $49.3 billion. Despite regulatory challenges, ByteDance's profits surged 60% last year, source BBC. Now, if you don't know, ByteDance owns TikTok. There you go. All right, so there's going to be a lot of stuff coming up that we're going to be tracking in the markets. So stay tuned as we go through this busy earnings week. Hello, everybody. This is Brent Foster. Thanks for tuning in to the Northbound Wealth Podcast. And I want to kind of talk a little bit about different areas of the market and the economy. So as it relates to U.S. equities, so the 2024 estimate forecast from JP Morgan's data was that the S&P 500 was going to actually not do well. 4,200 was their price target. Marko Kolanovic actually lost his job over it, over being too bearish. He got fired. And he was one of the number one institutional traders in the United States. And so he's gone. That's what happens when you are too bearish and make a miscalculation at one of the largest investment banks in the world. As of the close of business on October 25th, the S&P 500 is trading at 5,808. And so he was way off, well over 1,000 points. In fact, a lot of people were thinking maybe 5,900. They kind of shifted at mid-year over the summer, thinking it might hit 5,900 or 6,000 on the S&P. I think it might actually do that, and then maybe in Q1 have a correction to kind of consolidate those gains, and then look to press higher actually, and kind of see who the president is, see what their policies are going to be, and that type of thing. So let's see, S&P 500 earnings per share. That 4,200 price target JP Morgan had was based on EPS of $225 for the S&P 500. It's actually currently, as of October 25th, at $246 for EPS. MSCI Eurozone, the expectation was 256, and where we're at now is 174. So Eurozone hasn't done as well as what JP Morgan was expecting on earnings, and I suspect that's another reason why Kolanovic lost his job. Let's see, FTSE 100 and 7,700 was the expectation for 2024 forecast. Looks like as of October 25th market close, it was 82.49. So did way better than expectations. And then the Topix 2,700 to 2,800 was the expectation. And it's actually trading below that at 26.18 as of the 25th of October. So equities, there you have it. When it comes to the US GDP growth expectations for basically 2024 that they had was 1.8% GDP growth. They were off by quite a bit because we're sitting at 2.8%, which is actually doing a little bit better than the global economy at 2.7, and then the Euro area at 0.8, and then China at 4.8. They always tend to do a little bit better than us on the growth side, but they're also a different economy, a different market, and trade totally differently and report totally differently. So you can't always trust the data coming out of it. Central banks. Let's talk about central banks, the Fed, the ECB, and the Bank of England, which is the BOE. So current policy rate, the Fed 5%, fourth quarter 2024 looks like 4.5% is where the Fed is at. So 50 basis point cut there. ECB policy rate 3.25%, fourth quarter 2024, 3%. Bank of England 5%, 4.75%. So everybody's slightly down a little bit. So first quarter of 2025, the expectation is that the U.S. federal funds rate would be at 4%, ECB at 2.5, and BOE at 4.5. So still kind of cutting in a rate cutting cycle across the board when it comes to global interest rates around most of the banks. All right, let's talk about the 2-year Treasury note is trading at like 4.10% as of market close 10/25. 10-year Treasury note 4.23. Euro area, the deposit rate is 3.25%. Japan and another quarter basis point, and the UK bank rate's around 5%. So 4.75 to 5%. As far as commodities are concerned, a lot of people in the Midwest or in the farming industry, like to track commodity prices. West Texas Intermediate, or WTI crude, as of October 25th is trading at $72 a barrel. Fourth quarter 2024, the estimates or expectations at 76, so it's supposed to go up in value. And then also first quarter of 2025, $78 is the expectation, according to JP Morgan research. So Brent crude 76 is where it's currently trading as of the 25th. 80 is the expectation for Q4, and then 82 for the first quarter of 2025. US natural gas 2.56 is where it's trading now, 2.75 and then 3.55. So looking to trend up in that commodity through the first quarter of next year. European natural gas 42.60 is where it's trading, 45 expected, and then 50. So it looks like commodities are supposed to catch a bid, especially in the nat gas and petroleum space. Aluminum, as of the 25th, is trading at 26.44. That's up from what they expect in the fourth quarter of this year of 25.60, and then first quarter 26.50. So trading up maybe the first quarter of next year, trading slightly above where it's currently trading now. Copper 9,469. They expect 10,400 and then 10,700 first quarter next year. Gold, that's one that a lot of people follow. Gold and wheat are the next two. So gold 27.41, and then fourth quarter expectations 26.50, and then first quarter next year expectation of 2,700. So it's trading above where the expectations are. I suspect that will continue going. I would not be surprised to see a 2,800 print on gold, maybe even 3,000 here over the next coming years. Wheat 569 a bushel. The expectation is 650, and then 700 first quarter of next year. So it looks like they expect trends to continue going up there. All right. We still have a strong dollar versus the euro, 108, 1.08 on that one. And then USD, Japan, USD, JGP. I mean, I've got all these here. I don't need to go through them all. I'll skip that. Bore everyone to death on data. But anyway, I do want to make the point that the internals of the equity market are kind of consolidating a little bit. You see still price action holding that 5,800 level. Would not be surprised if we get a bit of a pullback before we press higher into new all-time highs and a solid ending to this year. We still have a little bit of time before the election, and then when final election results are printed and that type of thing. So there's going to be a heightened level of volatility. But I do see the market doing well between now and the end of the year. And then I also see a healthy correction happening at some point in the first quarter of next year. And that's to be expected. Maybe some tax loss harvesting, some rebalancing. We'll know who's in power if that transition went well, that type of thing. So obviously, it plays a part into the political game, plays a part into the sentiment and the behavior of people. And when equity markets are constantly pressing higher and interest rates are coming down, you could see some volatility happen. And then when we do get a little bit of a sell off, you're going to see a lot of people, I think, in my opinion, buying the dip because there is a massive amount of cash sitting on the sideline. And as people aren't getting higher interest rates for their treasuries or higher interest rates in their money markets, especially the wealthy cohort, they're going to start looking to deploy capital in areas that are a bit riskier that will get them a little better return on investment. I also see them being very patient in deployment of that. So it may take time throughout the next year or two before people really feel like they want to go out and take a little more risk, especially when there's a lot of unknowns right now. I'm saying I think in the first quarter there'll be more knowns and people will be able to deploy capital the way they want, especially CEOs in corporate America, as well as asset managers, money managers will feel a little more confident as to what the future might bring because they have more knowledge as to what that looks like. So I'm sure there's always going to be risks and concerns. Everyone's going to percolate those up. But so far, I think the equity markets are going to continue to deliver and do well. And when we get pullbacks and healthy pullbacks, they're healthy for a reason. It's good. I like it when markets do pull back and not always just go up and to the right. And that'll be an area where you look to rebalance and do deploy capital in such a way that you think that you'll get a nice return on investment in 2025 and 2026 and 27 and that type of thing. So I'm really excited about the future. I'm excited about the equity markets and the fixed income market, frankly. So if you have any questions and want to learn more, tune in to this podcast, tune into northboundwealth.com, and I'll continue to put out some information and comments from our firm and be happy to answer any questions you have. Stay tuned for the next segment. All right, a different kind of year-end review. Financial professionals typically focus year-round on monetary goals and wealth management strategies. However, we also believe that true financial well-being is intrinsically linked to overall life satisfaction and personal growth. This year, we're encouraging you to look beyond just the numbers. We invite you to conduct a personal year-end review encompassing all aspects of your life. This approach can provide valuable insights that enrich your personal life and inform and enhance your long-term financial decisions. To guide you through this process, we've outlined 10 elements to consider as you give yourself a year-end review. Number 1, celebrate your wins. Start by acknowledging your achievements. What made you proud this year? Write down your successes, big or small, and take a moment to celebrate them. Number 2, chronicle your skill evolution. Reflect on the new skills you've acquired or improved. Every skill adds to your personal toolkit, so consider how you can build on these in the coming year. Number 3, relive your best experiences. Identify the moments that brought you joy this year. What made them special? Create a visual representation of these experiences to inspire future adventures. Number 4, cultivate gratitude. Take stock of the people and things you're grateful for. Expressing thanks can strengthen your relationships and enhance your well being. Number 5, assess your health holistically. Reflect on your physical, emotional, and mental health. Identify areas for improvement and set realistic strategies for a healthier you in the new year. Number 6, evaluate your relationships. Consider the connections that enriched your year. Who supported you? Think about how you can deepen those relationships or forge new ones. Number 7, analyze your professional journey. Reflect on your career growth. Have you felt fulfilled? Identify energizing projects and consider how to pursue similar opportunities moving forward. Number 8, identify areas for personal growth. What do you wish to improve? Understanding your barriers can help you strategize effectively for the future. Number 9, set ambitious yet achievable goals. Use SMART insights from your review to set SMART goals, which is an acronym, SMART, for specific, measurable, achievable, relevant, and time bound for the coming year. And number 10, craft your roadmap. Finally, devise an approach to help you pursue your goals. Break them down into actionable steps with clear deadlines and regularly review your progress. This year-end review is a gift to yourself, a chance to reflect, learn, and grow. As you navigate the holiday season, take the time to conduct this personal review and set the stage for a fulfilling, successful new year. Remember, it's not about perfection, but progress. Celebrate your growth, learn from your challenges, and approach the new year with optimism and determination. Here's to wishing you a reflective and rewarding year end. Stay tuned for the next segment. Year-end giving strategies to maximize your impact. As we approach the end of the year, it's an opportune time to consider your charitable giving ideas and how they align with your overall financial strategy. America's generosity continues to shine with an estimated $557.16 billion given to U.S. charities in 2023, marking a 1.9% growth from the previous year. Trends in charitable giving. So affluent Americans, a net worth of $1 million or more, excluding their primary home and or annual household income of $200,000 or more, are leading the charge in philanthropy. 85% of wealthy households gave to charity in 2022. The average gift value rose 19% above pre-pandemic levels. Affluent households gave an average of $34,917 to charitable organizations. Interestingly, women are the primary decision makers in the household on charitable giving, while millennials and Gen Z are emerging as critical groups in philanthropy, often focusing on causes like environmental issues. Financial strategies for charitable giving. Here are some ideas to consider. Qualified charitable distributions, which are QCDs. If you're at least 70 and a half years old, you can donate up to $105,000 from your IRA as a QCD, which may satisfy your annual required minimum distribution. Donating appreciated securities. Instead of selling appreciated securities and donating the cash, consider donating the securities. Donor advised funds, DAFs. DAFs allow you to contribute assets and decide over time which charities and causes you'd like the funding to go towards. Let's see, charitable remainder trusts. These irrevocable trusts let you donate assets to charity while drawing annual income for life for a specific period. The remainder is then passed to qualified charitable organizations. Charitable lead trust, or CLTs, can be an effective freeze device for estates, locking in the value of transferred assets while making regular payments to a designated charity. Maximizing your impact. As financial professionals, we can help integrate your philanthropic goals into your overall financial strategy. We can work alongside your tax, legal, and accounting professional to explore the pros and cons of various giving approaches before making a contribution or implementing a strategy. This collaboration can help you align your philanthropic aspirations with your broader financial strategy. Some key points to remember are once you reach the age of 73, you must begin taking RMDs, or required minimum distributions, from a traditional IRA in most circumstances. Withdrawals from traditional IRAs are taxed as ordinary income, and if taken before the age of 59 and a half, may be subject to a 10% federal income tax penalty. Charitable remainder trusts and charitable lead trusts involve a complex set of tax rules and regulations. Before proceeding with either trust, remember that we can work alongside other professionals like estate planning attorneys who are familiar with the relevant rules and regulations. And then next steps, don't hesitate to reach out if you have any questions or would like to discuss this further. Reach out to Northbound Wealth Management, 317-399-1107, 317-399-1107, or check us out online at www.northboundwealth.com. And have a great week and weekend. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast.